Hello, active traders, and welcome to World's Top Traders. This is Ken Calhoun, president of Day Trading University Trade Mastery and the new World's Top Traders site. Really pleased to be sharing the stage tonight with my colleague Harry Boxer. He's a great guy. He's very well known. He's been seen on TheStreet.com and CNBC and MarketWatch and Forbes, and he just published a new book called Profitable Day in Swing Trading. Here's a picture of Harry and I from a couple of months ago. We were both speakers at the New York Money Show International Traders Expo. So Harry will be joining us in 30 minutes. He's the first of our lineup in our World's Top Traders.com site, designed to bring only the best people. You've seen the rest. Now I want to bring the best of the educators, people like this and Harry, well-known, well-respected, highly industry credible people, as opposed to all the second-tier wannabes that you've seen out there, incessantly done by internet marketers who pose as trading educators. Instead, I want to create a forum for top quality only people, and it's a real pleasure to be able to bring people like Harry to the stage as we work together in these events. As always, all information is for educational information use only. No advice about to buy, sell, or holds being made by watching this. You're not to make actual trades, etc. So we're going to start off. I'm going to lead off tonight. Originally, Harry was going to start, but we had a schedule change, so I'm going to lead off tonight. Harry's going to appear in 29 minutes, I'm told. So Harry should be able to join us in just around 30 minutes for tonight's event as well. So he'll be picking up the second half of tonight's event. For those of you not familiar with me, I like doing Las Vegas seminars, hence the Showgirls. You may have seen me in many different places, including next month's issue of Stocks and Commodities, as well as multiple previous issues. I'm all over the place. We're going to look at tonight finding successful trades and how to look for the very strongest day in swing trading charts, and also a bit on risk management and scaling, because no discussion about professional trading would be complete without it. One of the things that I want to go through today for both swing and intraday charts is looking for both day and swing charts for things like minor gap continuations, multi-day high breakouts, entries following wide range candle days, and more. So we're going to be looking at some of the very strongest charts in our markets. One of the things I like about Harry Boxer is that he focuses on the strongest charts as well. And he's one of those rare people who has an uncanny knack for getting it right. You know, when Harry's charts tend to run extremely well. I've tested and checked those. That's why I invited him to work with me here, because I only like to bring people to the trading community that are actually good to learn from, and Harry's on that very short list. Anyway, so when the S&P is like this, doing nothing, you really need to focus instead on some of the strongest charts. So we're going to start off by looking at these swing trading charts and then these for intraday, and I'm going to tell you what makes these good charts so that you can start, hopefully, developing a trading plan on your own designed to capitalize on these strong plays. So my favorite chart of all is going to be a minor gap continuation where the gap takes it to above previous highs. Now here's Cena.com, and you can see a couple days ago it gapped up from 41 to 44, and now it's currently up near, what, 52 and change. So that's a nice 5-point run in that instrument lately. One of the easiest strategies you can do to put yourself on the right side of your trades, if my life depended on it, I would only trade minor gap continuations, because that's institutional volume coming into those instruments. The trick is you don't want to trade, you know, at least I don't like cheap instruments that are under $20 a share. I don't like overly pricey things over 70 bucks a share. As a 15-year plus veteran professional trader, I like instruments generally between $20 and $50 per share that trade at least 1 million shares a day. I'll go as high as 70 if it's an exceptionally good chart, but most of these are in the $20 to $50 a share region. Anyway, these are the type of charts you want to look at. Bad traders would be saying, well, it's way up here, maybe I should short it. Good traders are, okay, when do I buy it? Is it 54.70, maybe 55 and change? We're always thinking about trading the upper right side of the chart. So keep an eye on charts like this, especially for continuation plays. So that's first one in the playbook, is minor gaps. Really good for either intraday if you happen to be in front of the charts that morning and you see an exceptionally strong minor gap continuation. Otherwise, look for good swing trading charts like that. Here's another pattern. Here's one I like, ADXS. It's a pattern I published in the last November issue of Stocks and Commodities, and it's what I call an acceleration ramp. And it's basically an acceleration ramp. It looks like kind of a hockey stick, where you've got a steady uptrend that then matures into a intelligently strong, high volume, 45-degree angle breakout. And I use 15-day, 15-minute charts, and I trade pure price action. I do not like a lot of derivative lagging technical indicators. I used to be a statistician, and now I'm a certified quality engineer for the Ford Motor Company, and have a strong background in quantitative, multi-degree, blah, blah, blah. The point is, I like to keep it simple and focus on the strongest charts that are likely to keep going once we get in. So obviously we don't want to buy under a near shooting star high upper shadow. I'd like to, and we never buy nines, I'd wait till it gets over 30. And that's another quick tip. Whole number resistance and support often plays a key factor in where you trade. For example, 24 is key resistance in this, till the cup breakout led to another 5-point run, and sure enough, it stalled out right here at 29, at that whole number. So I'd wait till it breaks over 30. And as you look for these kind of exceptionally strong charts, you're looking for signal charts. You're looking for things that are exceptionally strong in the face of mediocre markets. We have market mediocrity here. Chop, 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 typical summer markets. For those who've been trading 15, 20 years, you know what I'm talking about. Well, one of the things that I always do, and I always encourage all my traders, is to look for these recent strong price breakouts with high volume and high velocity. That's a big piece of your trading solution set right there, is identifying the strongest charts and then being able to trade them up at new highs. I'm not trying to get fancy and outguess the market. Hey, should I go short there? No, we're going to go on continuation breakouts. For intraday charts, here's one we're going to cover in a minute for intraday, but here's one we'd covered in my live room for my traders at tradingopen.com today, because we had nice open range day over day breakouts in Nucor, NUE, the ticker. And you can see we depend, as professional traders, we always depend on repetitive price action. So NUE, of all the tens of thousands of traders I've reached through my Day Trading University site, these are the types of patterns we love to capitalize on because they repeat themselves. If it's going to run up, a 1.5 yesterday, odds are it's going to run up, hey, look at that, 1.5 today. And we bank on that. And you trade just above previous day's high. Keep it simple. Trade the strongest charts. It doesn't have to be rocket science. You don't have to try and outguess the market. You just have to be on the right side of good trades. And what I want to train you to do tonight is, I'm really excited about this because, and I always teach my traders in my Money Show Expo presentations and my industry articles, we're always looking for a series. This is a rider downer, folks. A series of repetitive gaps, or where you see multi-gaps. That tells you they're so excited to get into this thing, they can't wait to buy it up, bid it up before the market opens. And so they buy it, it comes up, bids up again, and so forth and so on. So whenever you see multiple gaps, that's an even better signal that you should be buying over new highs. And when in doubt, just round your entry trigger up to, say, 50 cents above the nearest whole number for swing trades. Let's keep it simple. Maximum stop losses for swing trades should never be more than 2 days low. Okay, so if I bought this, say I bought this here, but oops, it's going against me, my stop would be 58. Okay, maximum stop is a loss of a 2-day, meaning today and yesterday's low. So somewhere under that is, even if you bought and it started to go against you and it's a swing trade, so you're going to give it a little bit of wiggle room, you only stop down there. You keep your stops as tight as you can. And then it all comes to fruition when you're trading nice charts like this one, HRTX. And again, another minor gap continuation, a great 45-degree angle breakout. Those are always, any street trader will tell you, 45-degree angles are going to be your best shot at strong trend continuations. This is an ideal setup for a swing trade. It gets started here. And odds are you didn't see it till this day or that day. That's fine. There's still plenty of room for it to run. You can see an ascending triangle here. So that's bullish, right? A shooting star there, so not quite yet. Want to wait till it breaks 28. But we got a minor gap continuation, multiple days, multiple points. Ran from 16 to 26. That's a 10-point runner. And yeah, from traders asking about the daily charts, absolutely. Because most of you are shorter term traders, I'm not going to go over those in detail tonight, but I like using the 90-day daily candlestick chart for that. And the number one pattern that I've published on for years and that I trade myself is wide range candle at the right side of a bullish cup, and you go and say 50 cents or buck above that. Now I've had competitors rip off that idea, but I originated wide range candle at the right side of a cup. Now they come up with fancy names for that pattern, but it's an old street traders. Ask any guy who's been trading the street for years, they'll tell you wide candle days at the right side of resistance is an especially strong chart pattern. Another rider downer. The good news is there's not that much more. I mean, you want to keep your trading simple but strong. Another pattern, though, this is one pops out to me right here. It's the first time I pulled up this chart today. You can see small candle followed by large candle, like baby bear, mama bear, papa bear, shwang. It's a good technical term, a shwang. Bada boom, a little technical humor there. Baby bear, mama bear, papa bear. Small, large candle at the right side of a bullish cup on increasing volume tells you the buyers are in the house. They're taking it easy the last couple of days, so it's kind of like wake me when it gets back over 30, eh? But that's how professional. Yeah, I've traded millions of dollars worth of stuff. I know how to trade. One of the things I want to teach you guys is how to stop dinking around with the screwball charts and instead focus on these strong, wide range, multi-point, high volume, mostly goes up when it runs charts, and leave the rest of it alone. So, minor gap continuations. If you do nothing else as a trader, resolve to only trade things that are outside the previous day's high-low range. Now, I mentioned this pre-event for those of you who are just newly joining us, but one of the things that any pro will tell you is avoid end days or end charts. So never ever, even though it would have worked out fine here, but as a rule of thumb, never enter a chart inside the previous day's high-low range. If you want to reduce your stop loss cost potentially dramatically, that's the one single brush you can take to your charts. And again, previous resistance is now new support, pulls back, boom, takes off to new highs. Go back over your last for proof, don't believe me or anybody at face value, prove it with the data. Back at Ford Motor Company, our quality vice president, Dave, had a sign in his office that said, "In God we trust, all others bring data." Because I'm not going to believe you unless you show me some data, show me some proof. So what I want you, and I never forgot that, he's a smart guy. That's why Ford's quality is job one and the best of the domestic automakers. Anyway, the point is, go back over your last 50 or whatever number stop losses you had, and odds are they will have been instruments that you initiated a trade on that occurred inside the previous day's high-low range. That's an aha moment. I have taught thousands of traders, and that's one of the things that they all uniformly find out to be the case. So I encourage you to look for that. Now, there's also steady uptrends. We're going to flip over to day trading channel in just a minute here, but I wanted to wrap up with our swing charts. Acceleration ramps, where you've got a steady uptrend that then gets a slightly sharper angle over a 3-week time frame. This is a 15-day, 15-minute candlestick chart. Makes for a good play up at new highs. And again, you just wait until it breaks above the nearest whole number, say somewhere over 25, before initiating a new entry. For scaling in, I always get this question. For position sizing, as my colleague Dr. Van Tharp would call it, I like to add every 2 points or so. So if I buy at, say, 25.25, I'll hit it again at 27.25. Okay, so add every 2 points or so. FireEye is on fire. That's one of the things. Any institutional guy will tell you always, like, Starbucks is on caffeine. They're taking a dent out of Alcoa, right? Always trying to put a joke for the price action with the type of industry sector the instrument's in. Anyway, FireEye, what I like about this is its recent history of steady buying. Just like when you're interviewing a job candidate, you want to see, check their references. Do they have a spotted background and sketchy history and absenteeism and performance issues, or do they have a recent several weeks of continuous good performance to count on? And those are the kind of charts you want to focus on. One thing I like too that you should all be on the watch for is these cut pattern continuations. Again, Harry will be joining us, or he's scheduled to join us in just about 15 minutes. So stay tuned for Harry Boxer. I'm going to wrap up in just about 15. But I wanted to give you a highlight of some of the very strongest charts out there in today's markets. This is the strongest charts in today's markets, period. You will find no better, or it would be hard to find, you'd be hard pressed to find any better charts than those. You look for a bullish cup, you go in on these cheap charts. This is a cheapie, it's under 20. It went from 11 to just under 13. You can go on maybe 20 cents above the high, so over 12. But again, a nice 45-degree angle breakout, a pause, and then a resumption of the trend tells us this one may be worth taking a shot at. And if you do trade cheap under $20 stocks, make sure it goes a little something like this. I'm a jazz musician, so I always like to put things in musical terms. Anyway, it goes from six and change to 9 and change. A nice 3-point runner without a lot of back talk. One of the problems with the cheap charts is often you'll get sharp angle breakouts that are weak and then they pull right back down and you get stopped out and then it runs up without you and you get frustrated. You ever been there, done that, got the t-shirt? I know I have. I learned instead to just rely upon those very few strongest charts like this. So if you are going to trade cheap under $20 stocks, for Pete's sake, make sure it can run a few points, number one, the volume is solid, and it doesn't have major pullbacks or dangerous gaps. And then it's a story of consistent buying, so you can jump on, you could have jumped on board pretty much anywhere here and come out smelling like a rose. Same thing for your charts. I want you to focus on the very best and the finest of the breakout charts in today's markets. Let me know if any questions so far. I know I'm going kind of at the speed of light here, but I want to get you up to speed on the best charts. Citigroup, all the financials were good today. Citi, JP Morgan, and Wells Fargo. It's not on my list, but oh yeah, it is. It's right there. I correct myself. I stand corrected. The banking sector was strong today. And one of the things you want to do as a trader is make sure that you are following your sectors to see, which of your sector percentage change is best from the open, as well as your broad market and your trends and your VIX. But anyway, this is my favorite type of chart where you have a minor gap. Even if it's an inside gap, ultimately it takes out a new 2-day high, and that's where you jump on board the trade. So those are the kind of charts from a professional day trading standpoint I like to use. And of course, I also rely heavily upon my tape reading, my ninja tape reading skills, to be able to follow live price action with a clear, large, easy to see time and sales window. If you've ever struggled as a day trader, you do not need a level 2 box. You do not need to see market depth. I used to teach how to do that back in the 90s, and some of my competitors still teach outdated techniques. Hey, 1990 called and they want their trading methods back, Sparky. But professionals, we use tape reading. What you want to do is look for price action in time and sales and make the tape easy to see. Just 2 colors, white and yellow and black, large font. And that way, when you're following a breakout in progress, a good momentum runner, you're able to see how fast it blazes through each multiple of 10 cents and where to get on the trade, and also how to manage your exits. So tonight, the main goal I have for you is to find out and to visually acquaint you with the types of charts, at least the ones that I like to teach all my tens of thousands of traders at TradeMastery.com and Day Trading University, so that you can see the best kind of charts that have the best potential in today's markets. And you're always, always, always looking for out charts, things that are outside the previous day's high-low range. Never, ever, ever enter anything that's in the middle third. If you remember back as a kid, I'm 51 years old, even though it certainly doesn't feel like it, but back as a kid, we used to have Neapolitan ice cream, or kind of like the flag of Mexico. You don't want to partake of that middle band. And same thing as a trader. It's kind of the equivalent of a doji, like my colleague Steve Nissen would teach about. Market indecisiveness is illustrated visually in the middle third of a chart. That's dead man's line. You never, ever, 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 ever want to trade anything in there. That's the stupidest, worst place to trade. You only want to trade, or mainly want to trade, things that are above previous day's high for longs or below previous day's lows for shorts. Do that. Here's proof. I'm just pulling up random charts like Twitter today. Little choppy today, but still did a minor gap and a classic Calhoun gap continuation. Don't you hate that when people talk in third party? I digress. Anyway, and another one of my patterns is a 1, 2, 3, where it moves up, pulls back down to half, and resumes its trend. Anyway, minor gap with the bullish cup breakout continuation above previous day's high. That's where you want to play as a day traders up there. My live trading open room today, we were nailing it to the wall with Nucor. I believe that one is NUE, the ticker. And again, remember, price action day over day is pattern day traders and pattern swing traders. You're really counting on repetitive pattern breakout length of run. 1.5 yesterday, the 1.5 today, like a crystal ball. It told you what it was going to do yesterday. So for Pete's sake, I hope you jumped on it today. We did. Boom, flawless victory. You're looking for those kind of charts because they repeat themselves day after day. And there is no magic indicators needed. You don't see me putting a whole bunch of derived technical oscillation indicators here. I'm a former corporate statistician and a nationally certified quality engineer. I know charts from production and manufacturing engineering background like the back of my freaking hand, and we apply kind of the exact opposite. In engineering and manufacturing, you want high CP, high process capability, and you want all the widgets basically to come out the same of the factory. In trading, we want the exact opposite. We want high variance and high variation. And so we're looking for optimal strong variance, and it'd be minus CPKs or negative process capability and very strong breakouts. So as a day trader or swing trader, you're looking to jump on these trades once they break above previous day's high. Now, how many of you have heard of algorithmic or programmed trades or dark pools or liquidity traps and all the rest of it? If you talk to any of my institutional guys or institutional clients, they'll tell you algo trading or algorithmic trading uses OHLC, open, high, low, close parameter data. So we've got the open, the high, open, low, and high and close. Anyway, they will start to scale in and add volume if and only if, greater than on Boolean operators, greater than previous day's high, PDH, previous day's high. That will kick in algorithmic trades. And that's why, as day traders, we want to jump in on continuous breakouts in those kind of charts and leave all the rest of the chop city, chop city stupid charts to the amateurs. Professionals trade breakouts, and we always like minor gap continuations as the signature play, at least in my day trading university site. That's why we're voted best of the net and the rest of it, because we're advanced for the smart people. If you're not particularly intelligent, then I'll go right over your head and you'll say, Roop, what is she talking about? It's not a magic green arrow, red arrow. You mean I got to actually think and use my head? And I got to click and actually manually scan? Yeah, welcome to professional trading. If it was easy, you'd have everybody and their brother doing it. Anyway, you're competing against the world's best and brightest, and what we do is we look for these strongest charts with very well-defined rules-based trading. And trading rules, for example, thou shalt not trade stuff that's inside the previous day's high-low. Just fix that. That's an easy give me. I just gave you that. I published that to tens of thousands, but that's one thing. Another is only or mainly focus on minor gap continuations as the core of what you look for. And there is no easy, I always get this question, Ken, how do you find them? Well, I click through the dang hundreds of charts. That's how you find them. There is no easy answer. You can look at the, briefing.com, and so the NASDAQ market site has pre-market gappers. Usually most of those aren't any good, but sometimes they'll occur. One thing that I always like to do is look on my leaderboard scan. I'm old school, so I use the 10.6 build of eSignal. They've been getting after me to upgrade to the 12, but I still like this because that's what I've made a lot of money with, so I like to do that. You look at the percent gainers and then pull up those charts that have over, 20, 30 bucks a share and over 1 million shares, and that narrows the field of a couple that you need to look at each morning, maybe 5 to 7. Very simple, very strong, lethally effective, and ultimately professional. Las Vegas Sands. You don't want to gamble with your trading, but you're not when you're buying a gaming stock like Sheldon's LVS. I like position trading, MGMS, trading all the gaming stocks off their lows a few years back. Anyway, Las Vegas Sands, look for a sequence of cups. You can always buy the first cup, and let's say you get stopped out and you're in on the second cup, and hey, I'm in the money, what do I do? When do I get out? Well, trail a stop no more than, say, 20 cents under the inside market on your day trades. Or if you want to go old school, you can pull up your 5-minute candles and see if there are any shooting stars or bearish engulfing. There aren't here. A good surrogate, this is for all the fellow candlestick aficionados, and again, for more, learn from my colleague Steve Nissen, and only Steve Nissen, the world's foremost authority in candlesticks, like Harry Boxer's one of the world's foremost authorities in good breakout trades as I am. We like to look for 2 red candles. That's kind of a reversal of course, and I see this consistently. So if you're intraday trading, look for 2 red candles and you get out, say, 10 to 20 cents under the low of those 2 red candles, and that usually gets you out near the top of the chart for that day. So that's another handy dandy rider downer. So good stuff. What else do we got going on here? JMEI, yet another good chart. So, and again, the single best thing that differentiates your best breakout charts are always going to be out charts, because algo trades, they scale in on when price action's above previous day's high. So you see these. Be interested to hear. I see Harry's here with us, so I'm going to turn over to Harry in just a few minutes. A real pleasure, because he's one of the best experts out there to actually learn from, unlike most of the educators who aren't worth the time of day. You always want to learn from the best and the brightest out there, and Harry Boxer is one of them. So for all my guys and ladies, I'm certainly happy to be sharing the stage with Harry. He's a guy who, you have my word, I have studied his techniques. A lot of them are similar to my own, and you'll find that is in common with the best traders. We focus on strong price action 45-degree angle, continuous breakouts in the market's strongest charts. These are they, swing trades and intraday trades for today's markets. Let's see, I'm eager to hear what Harry has to say. I'm tired of hearing myself talk, so I'm going to shut up and turn the floor over to Harry in just a few minutes. I don't want to catch him by surprise here, but Harry, are you with us? I just wanted to shout out. I see you're able to join us, so just wanted to welcome you to tonight's event. Not hearing you yet, but Harry, if you could say hi or when you're there. Well, Harry will be joining us in 5 minutes officially, so look forward to that. One of the things that I want you to do, as you know, when it comes to looking for these charts is, hey Harry. Harry, I can hear you back there. How you doing?
That's good. I just walked in. There you go.
Okay, great. I'll turn it over. Yeah, I can hear you coming through loud and clear. I'll turn it over to you in just a few minutes. I'm personally looking forward to what you have to say, because you're one of the best people out there that I learned from, which I say that less than like 3 or 4 times in a blue moon. So looking forward to hearing what you got to say tonight. So appreciate it.
Terrific.
All right, so traders, let's just, in summary, these are the type of charts that you want to focus on for swing trades. If you are looking at your daily charts, one of the simplest, cleanest chart patterns is look for either 2 increasing whole real body candles, preferably a wide range candle at the right side of a cup, and you hit at 50 cents over the high. When you're looking for your swing trading charts, I like these accelerating patterns. Acceleration ramp is what it's called. It's steady uptrend, sharper uptrend on higher volume. Just a good classic strong breakout, simple strong price action breakouts. These are the type of charts that you want to focus your energy on when it comes to swing trading, or things that actually keep running up without a history of a lot of pullbacks or moves down. Whether they're cheap instruments like these, or for intraday charts that have recent strength, like our banking sector today, we've got some really good charts to work with. So Citigroup, Wells Fargo, and JP all up nicely today. Personally, I like charts like this. If you're going to day trade for a living, or if you're going to do this and be serious about it, one thing that I urge you to do is look for repeating pattern type charts where open range breakouts are similar in length and duration, and those are the best odds types of charts, where your chart is kind of like going to the eye doctor. I've got a freaking 8.5 diopter correction. Blind as a bat without my glasses or contacts, but I'm 20/20 with them. You want to have clean A or B. Which charts are better? You look for ones that have nice clean breakouts that are most likely to produce winning trades. You know, the trick isn't to buy a high. The trick is to get in while it's still going up, and you can make a decent trade success out of it before it goes against you. And when it comes to exits, again, look for 2 red candles in a row on a 5-minute, and a loss of that usually is a good place to jump off. That'll get you out within a reasonably tight degree of the top. So with that, I am going to the only pitch for me is if you guys want to learn from me for free every week, you can go to my free events here. Saturday events are up to over 3,500 registered for those. So I think it's the top attended industry event. Trademastery.com/free, and that'll sign you up for my free Saturday trading week ahead events. They're only 20 minutes. I keep it short and to the point with the market outlook for stocks, Forex, E-minis, and mostly stock swing trades and intraday trades. So if you want to learn more from me, that's free, and just go to those. And I've been doing these for 3 years every Saturday. Initially, I'd done them back in the year 2001, but now I brought them back the last few years. So that's a good way to work with me for free. So anyway, I'm Ken Calhoun. I run Trademastery.com and a bunch of other sites. I'm out of here. Let me go ahead and turn it over to the illustrious Harry Boxer, one of the world's top experts. There's Harry and I at the New York Expo a couple months back, and looking forward to working with you. Let me introduce Harry before I turn we've got a minute left here. For those of you who are my traders, and if you haven't heard of Harry Boxer, you should. He's been featured in TheStreet.com, Forbes, MarketWatch, and CNBC. Harry's got over 45 years of Wall Street experience. He's author of the recent book, recently released just last summer, A Profitable Day in Swing Trading, and you can get that on Amazon, as well as learn more about him and his services at www.thetechtrader.com, and you're certainly encouraged to go over there. He's got a live trading room, which is excellent. I typically don't work with people that have directly competitive services, but Harry can help you trade, and that's my mission. So I don't mind losing some customers to Harry because he's a great guy, and I heartily endorse him. I turn my family and friends over to Harry to teach him how to trade. He's one of the industry's top experts. So look forward to seeing what you've got for us tonight, and I'm turning the control over to you now, Harry. Looking forward to it. And you guys, y'all have my word too. I only work with the best and the brightest, like Steve Nissen and Brian Tracy, Tony Turner, Van Tharp, the best people in the world. Harry Boxer is one of those, especially for the strongest stock trades. What I like best about Harry Boxer is he teaches actually strong momentum charts that usually run up nicely after you get in, and he's got a really keen eye for, he's an expert. I've been following him for years. He's got a really keen eye for the very best charts out there, and that's half the battle. So without further ado, give it up for Mr. Harry Boxer. Hey, Harry, welcome aboard.
Thank you. You're hearing me loud and clear?
Yeah, coming through great.
Okay, good. Just wanted to show the visitors my homepage and a quick look at the type of thing we're doing. We're basically a day trading and swing trading service. We have a very, very active room with several hundred people in it every day, and you can see they're all making their comments and contributions, and people are commenting about their comments and things of that nature. And I'm giving out all day. I'm giving out day trades, and occasionally I'll issue a swing trade. I actually issued 3 swing trades today. So anyway, I wanted to keep that up there for you, and just give you a quick look at that. Today we're going to talk about, and when it comes right down to it, I wrote a book and it's got 17 chapters in it, but the one chapter that's my favorite is the chapter that I call my favorite day trading pattern. The bottom line is that when you're looking for a day trade, there's certain ways to find the stocks that may be the best day trades, and some of that includes. Let me put something up here for you. Hang on a sec. So basically, the day trades that I'm looking for come from my intraday patterns, and I use 1-minute charts. And 1-minute charts I find are the same as patterns form in the same kind of formations form at all time frames. And I used to be a daily charts trader, but then I discovered that they work. And this is 15 years ago, of course, and I've been trading since the early 60s. That the patterns that form in day trades, whether they be on bar charts or candlesticks, I know that Ken uses candlesticks. I use bar charts, and I've used them for 50 years. And when people ask me, why don't you use candlesticks, I always answer, well, if it ain't broke, don't fix it. And I don't need to, even though I understand candlesticks, I don't want to have to look at bar charts and candlesticks. I really feel like what I do works, and you can ask any of my subscribers. And if you go to my site, you'll see a bunch of testimonials about what people think of me and the site. I think you'll get a kick out of it. It's a 2-week free trial. You can come in for 2 weeks and get the full service, both the day trading, the trading room, the nightly videos, the weekly webinars that I do on Saturday mornings for my people, and also the swing trade service as well. And you can get that free for 2 weeks, and you can get a feel for whether it's something you want to do. But let's get back to what I'm going to cover today. It's the chapter out of my book called My Favorite Day Trading Pattern. Basically, the intraday rising channel that occurs when stocks are running intraday, such as you see in front of you, Halozyme. Today was a perfect day trade for us. But during the course of my 45 years of trading experience, I've noticed that many patterns that develop there are many patterns that develop during the sessions, but the one that appears to be the best is the intraday rising channel. I find that it usually starts with an opening gap or a price thrust. Sometimes it's not the gap, it's just a thrust off the get-go. But normally it's followed by some consolidation, whether it be a falling wedge, a flag, a coil, one of those bullish continuation patterns. And usually it holds the 50-period moving average on the intraday basis. You can see the little red dotted line there. Sometimes it fills the gap, sometimes it doesn't go below the opening gap, especially if it's a spike down and spike up like this. That's usually an indicator it's going to go higher. This is just one case. And by the way, all the examples I'm going to show you today are from today's trading only, just from today. It'll show you that every day there are stocks that channel up and form consolidations and keep running. I think the reason I like it the most is that the intraday rising channel allows for staying in a day trade to milk the trend for the longest possible time frame intraday resulting in the largest possible session-long profitable day trade gain. It's close to a parallel rising channel. It's in that the bottoms and tops tend to always be in a parallel level. Sometimes they're at a 45-degree angle. Most of the time they're closer to a 45-degree angle. But I have found that 45-degree angle is so common in many day trades that it's almost uncanny. And as long as the stock doesn't violate for the majority of the trend during the session, you can stay in the trend longer. I think the biggest problem most of my traders have always said to me is, you gave me a great stock and I got out too early. And I always say to them, well, I think the problem with getting out too early has to do strictly with your lack of discipline as to where to put your stops and where that kind of thing may be. So we're going to have to look for those kind of patterns during the day. Now, I think one of the things most people also don't do is they don't do their homework. In the morning, I'm on my site an hour and a half before the opening, just after 5 o'clock LA time. And what I'm doing is I'm looking for stocks that are gapping, and I'm looking for reasons for those gaps. And then I'm looking to see what kind of short position. In this case, 14 days of short interest to cover. In other words, the average daily volume, it'll take 14 days of average daily volume and halazine to cover. When I see a big short position, I see a big gap up and a nice pullback on lower volume, then normally that's my go. And this morning, this was the stock that we looked at on our site for a trade. If you'd gotten in when it broke out here at around 1850, you had more than a point on it by the end of the session. And at no time did it violate any of support levels. Okay, so that's one of the reasons why I like that intraday day trading pattern the most. It just affords you the ability to stay in a trade. It's truly amazing to me that the vast majority of intraday rising channels extend upward at or near that 45-degree angle. It really is amazing. Let's see if we can show you some other examples. Sometimes they just pop up, go sideways, and then move up. You can see that's the case here. But this one started out in the morning here with a very sharp angle. But at the time, it was a 45-degree angle. I also look for 5 waves every time I see a stock move. It'll move in 1, 2, 3, 4, 5 waves, and then it'll go into a consolidation. But this turns out to be 5 waves within the first wave. This is the second wave here, a long one. And this is the third wave, and maybe you can see this is after hours trading, so I won't count that. The bottom line is, though, that, well, let me take that out, actually. Okay. This is the way this stock closed today. If you were in this stock, you could have stayed in it all day and never been stopped out. Okay, I had to do something. So when you're in a stock, particularly the stocks that are moving up in a 45-degree angle, they're really terrific, and you can find a lot of them all day with different kinds of stocks. See, here's one that ran up, consolidated, and ran up and kept going, and only did it violate stop right here at the end of the session. But for me, the vast majority of stocks that we're trading in the morning, because by midday, a lot of traders, institutional traders for interstock, are taking their profits and going to lunch. Believe it or not, as funny as that sounds, that happens more often than you want to know. Here's another perfect 45-degree angle. ARDX popped, pulled back a little bit, and when it broke out of here, we went in around the 1285 range. And you can see from 1285 to 1557. By the way, my third level target was 1550. We reached 1557, the stock rolled back. And it's amazing to me how they follow these channels all day. It didn't violate support here or here, finally violated it there. And it also violated simultaneously the trend channel. That was my exit right there. If you didn't sell it at the target, you were stopped out there. Hold on a moment. Okay. Now, these occur on all time frames. And you know what you normally see in this pattern is a lot of these, they'll run up, they'll get very quiet. Right in here, for example, we call it the low volume ebb. When the stock gets narrow within an uptrend, forming a bull coil or pennant, for example, in this case, a tight little pennant, and the volume is really quiet here near the apex, you usually get a pop. You got it here, and you got one there too. See how quiet it was in here? Look how low the volume was in here. Hardly trading, and then it popped. So as long as that kind of consolidation process is going on and it's doing it bullishly, meaning that the characteristics of the trend are bullish with volume on the upswings and low volume on the downswings, you have strong volume on thrusts, low volume on pullbacks and retests. That's what you want to see constantly. And until that changes, where it suddenly breaks a trend line or support level or moving averages or all three, and it does it with a thrust to the downside, which would break, for example, the trend. And we can do that same thing on the upside. There's dozens of examples. Let's go through some more stocks that we looked at today for trades. Now, here's one that didn't occur until late in the session. I was watching the stock RXDX, but when it broke out here and consolidated, it got very, very quiet, and then started to move again. We went in for a trade around 1690, and literally within 40 minutes, it was trading at 1818. That's the kind of trades we like to get, quick ones. Guidewire is a different story. Now, this one exploded and barely gave you a pullback until here. But even then, this pullback was a nice little tight falling wedge right in there. See it? The volume got extremely, almost not trading, narrow near the apex. Then it popped. Now, the frustration with this kind of a stock is you waited another 3 hours before it popped again. And even then, it was just one bar pop. But notice that the lows here, across here, were not violated at any time. They did test them here and here, and then finally in the last 90 minutes, it moved from 51 and a quarter to over 53. And by the way, all my people were given a target at 53 to 53 and a quarter. Look where it is, 53.22 at the very end of the day. So you could have stayed in the stock all day and just watch it make money for you. After it broke out here at 50 and 3/4, 50.90. Nice little day trade there. And then we showed you VLTC. That was a big one today. Now here's one that's a biotech stock that popped early and then pulled right back, but it held a gap and moved up and formed a flag. It was a very difficult call because it didn't form anything of importance, meaning it wasn't a solid pattern, but it just kept going up all day. Weibo, there's an interesting pattern. It opens down, but during the course of the morning, it ran up, pulled back, and tested this little pullback low right here. In that zone, tested the 50, formed a little flag pattern. That 50 held. Isn't it amazing how it does that? It does it all the time. From that level, when it broke out there, we talked about going in on it over a little over 18, and within 30, 40 minutes, it was 1893. The pullback held in that zone, so at that point, we had put a stop under here. Never violated it. The rest of the day it kept going up and ended up at 1930. VDSI, another explosive move today. Now here's an interesting one that I want to point out that we did a swing trade on. I'll show you why. This is a stock that I've been in since it broke out back in here in May of 2014 when it was trading at about 10. And we milked this for a trade for a lot of months, and it went all the way up to 30. Over the course of the next several months, it went nowhere. But today, an interesting occurrence took place as it took out this resistance level right in that zone and did it with an increase in volume, 2.4 million, and with unbalanced volume at the high for the year. Now, when you see unbalanced volume making new annual highs when price isn't, that's a positive divergence and usually leads to much more increases in price. And for me, we're long as of today, and I'm looking for the stock to be 34 and then 38 to 40. So this also applies on swing trades as well. When you're looking at, and it's amazing how many swing trades started out as day trades and then became longer term trades as long as the support wasn't violated. And you see that all the time with stocks that we follow. We follow stocks that trend, stocks that consolidate in bullish patterns. This was also an interesting day trade. If we looked at it, we saw this spike, and then we saw this, at which point I told my people this is looks like a good late scalp trade. Now, we also scalp them, meaning a scalp is anywhere between 3 to 5%, something quickly. It broke out right there. Many of us jumped in. This could have been why it went up. It then pulled back and gave another opportunity at 11.35, and sure enough, by the end of the day, it was 11.87 for a nice 50-cent late scalp. We did that a lot in our room. Wendy's was one I want to point out that we saw the gap and the wedge, and we bought it on the breakout. It ran up here. It formed a little flag. It ran up again. It didn't quite reach my target. This one I had a target in about 1174, and it then faded the rest of the session. So you have to make a choice. At what point, when this channel is broken, are we getting out? Nice little pop on EYES, and this, by the way, happens to be a swing trade. I'll show you this. This is a swing trade because when it broke the declining tops line here and went through the moving averages, notice on the daily chart when moving averages cross over, you often, and then the stock will pull back towards that level. It's often a very good time to buy the stock. In my mind, this stock broke out 3-4 days ago, but when it got to resistance, it couldn't get through. It pulled back. Notice when it pulled back, the volume was lower, yet the unbalanced volume didn't fade. This stock was being accumulated on the pullback, and today it took a nice little pop. When I look at swing trades, I always look at 15-minute charts because I want to see 3 weeks worth of information. So we take a look at a 15-minute chart, get an idea of what it looks like, and one of the reasons I put a swing on it was not only that big surge, but it also held this in a nice wedge type pattern. Here's your wedge. And that exploded out of that today. So we day traded it when it broke here, and we also, many of us are on swing trades. And it closed very nicely. Here's a stock that's also a swing trade, GIMO. First of all, when it broke out in October of last year, it was breaking through a lot of things. It set up a nice flag in here and then ran up again, pulled back, and broke out again. But I didn't put a swing trade on this stock until it broke out right there. The volume picked up. It was the biggest volume bar in 2 months, coming out of a consolidation phase of about 7 weeks. And then it sat there and flagged for a week and gave you a whole week to buy it. Then a breakaway gap, I believe, on earnings. And look where it's doing now. The stock continues to make new highs. It reached 33 today. We originally gave it to my people in April at 22.5, I think it was. So we're up about 50%, and the stock still looks like it's going higher to 37. But today was also a day trade day on the stock, and that's the beauty of trading stocks. You can trade them as day trades, you can trade them as swing trades. Now, this morning when it spiked up, it was hard to buy, and literally it didn't do much the rest of the day. So sometimes the day trades don't work as well as you'd like them to, but the consolidation was so bullish, I bet you this makes a move the next day or so. OPK is another one of our favorites. This is also a swing trade. I first spotted it here, and we did a swing trade there, and then it went to a 3-month consolidation. When this broke right there, I put a swing trade out for my people at about 15.5 with a target of 18-19 range. We reached 18.29 quickly within about 6 trading days. When it put a flag in, and a beautiful flag, and the volume dissipated a bit with technicals holding up well, we put out another swing trade with a target of 20 and 23. So these are some good ideas for you folks. Take some notes. Now, let me get back to the part of my book that I wanted to discuss that a lot of these patterns get when they do this consolidation, and it's called a low volume ebb. This may not be the best case. Let's see if I can give you intraday patterns that, yeah, for example, we talked about ARDX earlier. When it runs up and gets to the apex of this coil, the volume should be really quiet. Most often, the previously mentioned trend channel will be started with either an opening gap, price thrust, or a fast start out of the gate. But what we're looking for is the first consolidation, ideally on a low volume ebb. We don't normally see that all the time. And sometimes you don't get the consolidation until it gets up here. But even in this case, when it ran up and consolidated in this little pattern, let's call it a mini ascending coil. See it? Look how low the volume was right there, right near the apex with tiny little bars. If a stock is run up like this and is not getting any profit taking and is doing this, this is called a bull coil or bull mini pennant consolidation, whatever you want to call it. But within 20 minutes, we had a nice little profit there, and it, at no point under these lows or under these lows or even here across these highs and this low, these lows in there, did this stock violate support level? Did it? No. And as a result, that was a good day trade. And you know, you can go through a lot of different patterns. There's a lot of things that went on here, but the bottom line is that each and every day we find stocks that trend and run. NQ was a stock that I said, let's buy the first pullback. It looks that strong. So it reversed and pulled back and then started to move. And when it moved to the pickup in volume, I ended up with a nice little short trade and then a coil. And at the end of the day, closed at the high for the day going away. What I do want to show you is some of my top 25 stocks and why they're on my top 25 list. Starting with Trovagy, excuse me. When you look at chart, I always look for stocks that have come out of base patterns that are trending. And here's another perfect example. The breakout comes with a pickup in volume, right? And then over a period of 3 or 4 or 5 weeks, it gets very quiet and narrow, a low volume ebb near the apex, near the moving averages, and then explodes. Then it forms a big wedge and explodes. And guess what it did up until today? It formed another wedge, and today it exploded again. Each time the volume picking up as it does that. As far as I'm concerned, my target on this stock has to be somewhere near 14.5, 1183 today. Where would I stop it? Certainly under here, under 10. If you're a real short-term trader, you probably stop it right under there, under about 1075. But I'm looking for momentum, and I'm looking for this to continue. This is one of my top 25 stocks. And by the way, one of my other services is that every weekend I publish an updated top 25 list as well as a boxer shorts list. GLOB, look at this breakout today. That's a top 25 stock. See, once they come breaking out of the base and they start forming these bullish patterns, that's when I put them on my hot list. And you can see how this happened. This was a swing trade right there. Look how fast that popped. Then it pulled back down, and now it's doing its thing again. Straight path, another one. Breaks out there, swing trade. It's still going. AGEN was a swing trade there, a quick one. Then it formed the wedge and it broke out again, and we put another swing on it. Guess what? I don't think it's done. I can see the stock up in that $10 range. RTRX is running. That's another. I showed you GIMO. How about this one for a perfect parallel textbook pattern? Your left shoulder, your head, and your right shoulder, this is called an inverse head and shoulder. When it broke that line, it broke through the declining tops line and the 50-period moving average on the daily chart and just exploded. Then it formed a beautiful wedge. I put a buyout when it broke out here in the 23.4 range. Look where it went to within a week and a half, 36.63. Well, it's forming another wedge, and unless this breaks down, which it doesn't look like it will, and you can be protected with it under 30.80, 89, I'm looking for a 39 to 40. I think we may get there. The micro's another. Broke out here, I put a swing trade on. It then coiled for a few weeks. It broke out again. My targets now are 18.5 and 22.5. And with that pattern, what's to say it can't go all the way up to 35? Semiconductors are hot. BSFT, this is working beautifully. OPK, we showed you. INFN, that's another one. When it broke out here and consolidated, and then broke out here, everything was fine. But this was the big breakaway gap. The first pullback at around 16 was a swing trade. My target was 20, 21. We reached that already. My second target is 25 and 27. I want to see stocks with momentum. I want to see stocks in uptrends. I don't try to bottom pick. We play momentum. Look at this chart on Nautilus, and look at that breakout of this little wedge today. How about this for best stock of the year? Here's my vote. ADSX, this stock has only gone from 2.5 to 29, I think. 2.5 to 29.42. How about that for a move? And it only since Thanksgiving. But when it broke out of the base, we had a swing trade there and a beauty, and then it had a falling wedge. When it broke out of the falling wedge, we went long. It reached my target here and here, pulled back, and now it's doing its thing again. My target's at 33 and 45, and I wouldn't be shocked to see it do that. Amicus Therapeutics, you notice the theme here, a lot of these are biotechs. If they're not semiconductor or the biotechs, guess what? Those are the two groups that typically lead Wall Street, up and down. Until these crack and break hard, I'm not going to get bearish on the street yet. Anyway, there's others in this. There's other good-looking charts in here. FTNT is a monster. Taser was beautiful for us this year. We traded it 3 times. Blocks still going from where I gave it to my people at 18, 19, 26. SUNE, my favorite solar stock, in at 17. Here it is 30, and so on and so forth. So when you're in with my service, you're getting ideas constantly, daily, intraday. I put out. You'll be interested in hearing that when the market opens in the morning, before the market, way before the market opens in the morning. I'm showing stocks that are gapping up, stocks that have the ability to, let's buy the first pullback and see what the action looks like. Look at that spike right there. We were caught flat-footed when it went this fast, but we got in and we made a beautiful trade on it. Because in the morning, I'm scouring the market for ideas, and I'm putting out what we call a focus list. I issue the focus list. I then go over the focus list in what we call HB's pre-market talk. Well, I will cover all the focus stocks, the patterns that are developed before today, what they look like pre-market, and whether they're breaking out above key resistance levels and whether we have the chance to make whether the short interest, for example, is huge and it's a possible squeeze and a combination of technical factors. But so that, if you get nothing else from today, I want you to get the gist of the matter, and that is that the TechTrader.com specializes in day trading 1-minute charts, swing trading 5 and 15-minute charts. And I think if you come into the site, and what I would suggest you do is sign up for free, and then go in and talk to some of the people on the site and ask them what they think and what their experiences are. I think you'll be really pleased with what you hear. And it's a fantastic community of really smart people who like to mentor and instruct each other. The ideas that come out of my site are phenomenal. And it's amazing to me. I have just 2 eyes. I can't watch 12,000 stocks. But amazing to me how often some of the best traders in my room are throwing symbols at me, and how often those symbols become great trades for the rest of the community. So the Tech Trader is truly a community where everybody likes each other and helps each other, and there are no negative people in the room throwing out, calling names or doing any of that. If I see it, they're gone. Anyway, that's my presentation for today, talking about day trading and swing trading using the patterns that I like to use, mostly breakaway moves out of base patterns and consolidations. Are there any questions?
Hey, Harry, thanks so much. That was great. Let's see, I was going to say, if you say a question from Don, Harry, where do you put your stops? Another one is, how do you find or scan stocks you want to trade? So where do you park your stops, and how do you find ones for trading?
Let me say that we don't trade without stops, and when I give a swing trade or a day trade, I always give a stop. And I tell everybody, if you're in a stock that I said stop it here, and if you haven't stopped it, and 3 days later you ask me what to do with it, I'm going to tell you that you're probably not right for trading, because if you're not disciplined enough to put stops in, look, losses are part of the game. If you don't know how to take a loss, you're going to have a problem in day trading. My stops are based on several factors. Intraday, I look for pullback lows. In the case here, for example, if I bought the stock anywhere here, it's being stopped right under there. If it then went up here and pulled back, notice where the pullback was, near that prior high. You always give yourself a little leeway, too. And then the breakout. Here's a stop there, and here's a stop there, and finally it got stopped out if you didn't trade it out. Yes, it went back up again, but still, you got to be disciplined at some point. And so I look for, especially on daily charts, the most important thing about a trending stock, like in Micron when it was running up, back up here, look at the breakout, look at the moving averages, and look at the trend lines, and look at the prior lows. When you see prior lows, like there's 3 of them in here, you stop it underneath there. That's all. If it breaks back out again, you go back in. That's the problem with most people. Once they stop out of a stock, they won't go back in. How I find my stocks in the morning, I use Briefing.com. I think it's the best news service out there. They publish pre-market gappers, up and down. And they also publish all the news about those stocks and why they're gapping up and down. And I can make a judgment call after hearing and seeing the news and then looking at the chart and looking at where the resistance might be and what the channels are saying and what the projections might be. That's when I decide which ones are on my focus list, and then we decide after the market opens, 10 minutes after the market opens, I will do HB's first update, in which I tell everybody, if you're not trading the first 10 minutes, that's fine. Wait for my update, see what I have to say about how the early patterns are developing, and then you'll get my indication whether I think this is going to be an excellent potential day trade or not. People tell me that they go in after that first update, they put in a couple orders, they put in their stops, they put in their targets, they go out and play golf, they come back to see how much money they make. It's pretty cool. I have a lot of people that have retired or quit their jobs to day trade full-time and are doing extremely well. Never dreamed they can make so much money. The one thing I pride myself in is teaching. People know that you can ask me a question anytime, and I will answer it, and I will try to teach you all about trading. The number one way I lose my subscribers, they don't need me anymore because they've learned it and have learned it well. But they stay anyway. I have people with me 15 years because they love being in the room. They love being with the people in the room, and they've made personal friends. And so that's a long answer to your question. Do we have any other ones quickly?
Yeah, well, hey, sure. Harry, I just want to say thanks. It's refreshingly competent, great. You know, you're head and shoulders above all these other moron educators that talk on PowerPoint charts about stuff from 200 years ago. I mean, like me, you work off your live charts. You're looking at gap continuations. You
Yep.
have my heartily endorsed recommendation for everybody in the world should be learning from you. You're one of the refreshingly capable, competent people out there. I picked up from you positive divergence and volume. I don't use that. I'm going to start doing that in bull coil patterns. That's new to me, so I'm going to look at that. I got one question for you for everybody before we wrap tonight, and that's just simply this: and you got more experience than I do. For traders, one of the few guys out there that does. For traders that make it, and what you've seen in terms of progress of your members over the years, what's say one important change or fix or transformation or thing they stopped screwing up that they started getting better at that helped them turn the corner for trading? Something. Is there one thing that
it's everybody's first of all acknowledge their realization of what patterns work and what don't? But the number one thing they tell me is I've learned to be much more disciplined, and I never trade without a stop ever. And I also know what my targets are and my stops when I put the trade in. And that's key, and I give them that information every day. But, you know, after a while, you start to see the patterns developing on your own, and you start to learn on your own. But, you know, it's just a great community of people, several hundred people in a room at the same time, all chit-chatting with each other about stocks. And it rarely gets into anything like politics or anything like that. So it's a cool place to be if you're really serious about making money and trading stocks.
Okay, good. Yeah, you're one of the few good guys out there I recommend. So thanks, Harry, for being here. I know you're busy. Thanks all the traders for being here. We will get the video up online, and I'll send out the link to everybody within the next day or two. So, Harry, thanks a lot. I learned from you personally. You have my full endorsement and testimonial for you're one of the few good people that the entire trading community can learn from and hopefully get better in their trading with because you do it right. So thanks for standing above, you know, the other educators out there. It's hard to find people like you, so I appreciate it. And on behalf of all of us, thanks, Harry Boxer. It's a pleasure. You're the first of my world's top traders at the site, and it's a real honor to be working with you. You're worth learning from. So thank you. And personally, too, I want to thank you because you set the bar for how to do it correctly out there compared to all the BS that's out there in the education industry. You're one of the few shining beacons out there that can actually teach people how this thing actually works. So thank you.
And thank you for having me, and always good working with you, Ken. Thanks again.
Okay, thanks. Good night, everybody. See you.